The old world order didn't end with a bang. It didn't end with a nuclear flash. It ended with a handshake in the Swiss Alps, between a Silicon Valley billionaire and a populist president who just declared his power is limited only by his own morality. If you are holding the S&P 500, if you are betting on big tech, or if you are wondering why your grocery bill is still fluctuating like a penny stock, you need to listen to what I am about to tell you. Because what is happening in Davos right now, in January 2026, isn't just a conference. It is a funeral for the global economy as we knew it, and the baptism of something much more volatile. Intro montage, images of snowy Davos, Donald Trump stepping off Marine One, nervous CEOs, stock charts flashing red and green, and the American flag superimposed over a microchip. The rules of the game have changed. And if you're playing by the 2020 rulebook, you are going to go broke. Let's get into it. For decades, the World Economic Forum in Davos was the temple of globalism. It was where the Davos Man, the archetypal CEO who cared more about stakeholder capitalism and ESG scores than national borders, went to rub shoulders with European bureaucrats. The vibe was polite. It was predictable. It was safe. That safety is gone. This week, the mood in Switzerland isn't cooperation. It's capitulation. Donald Trump is back for his second term, and he isn't there to negotiate. He's there to dictate. The input coming out of the summit is terrifyingly clear. Former UK Prime Minister Rishi Sunak, a man who knows a thing or two about market crashes, put it bluntly, the rules-based system most of us grew up with, that is gone. The quicker everyone recognizes it, the better. Translation for your portfolio, the era of frictionless trade is over. The era where a US company is just a global citizen is over. We are entering the era of gunboat capitalism. In this new world, the United States government is no longer the referee of the global market. It is the star player, the coach, and the guy who owns the stadium. If you are an ally like Denmark, and you refuse to sell Greenland? Tariffs. If you are a company like ByteDance? Forced sale. If you are a CEO who criticizes the White House? Your stock price might get crushed by a single Truth Social post. David Malpass, the former World Bank president, the very institution built to stabilize the world in 1944, is actually cheering this on. He calls it breaking the quagmire of elitism. But let's call it what it really is, the weaponization of the US economy. Why does this matter to your 401k? Because for the last 40 years, Wall Street loved stability. But under Trump 2.0, volatility is a feature, not a bug. The market is pricing in a United States versus the world premium. If you are invested in US multinationals that rely on friendly relations with Europe or China, you are holding a burning coal. But if you are invested in the companies that have bent the knee to this new America First industrial complex, you are riding the wave of the century. Let's talk about the biggest shift in this narrative. It's the story of Mark Benioff, and it's the story of every major CEO in your portfolio. Remember the Mark Benioff of 2020? The Salesforce CEO was the poster child for woke capital. He was socially liberal, critical of Trump, and focused on global equity. Fast forward to 2026. Benioff is dining with Trump in Tokyo. He's calling for the National Guard to occupy San Francisco. And in Davos, he is explicitly asking Trump to prioritize US companies above all else. I want to continue to see that United States companies will continue to be prioritized, Benioff says. This isn't just one guy flip-flopping. This is a sector-wide realization. Douglas Rushkoff calls it survival of the richest. Silicon Valley has done the math. They realized that in a world of geopolitical chaos, neutrality is a death sentence. You cannot be a neutral tech platform when the US is engaged in a Cold War with China. You have to pick a side. And they have picked the winner. The friction between Washington and Silicon Valley is gone. It has been replaced by a techno-feudalist alliance. Look at the industrial policy coming out of the White House. We are seeing things that would have been unthinkable 10 years ago. MAGA Marxism, some are calling it. The Trump administration has effectively taken a national stake in Intel Corp. Think about that. The Republican Party, historically the party of free markets, is now nationalizing stakes in critical infrastructure to prevent it from failing. Why? Because chips are the new oil. And Trump understands that you don't let the market decide the fate of your oil supply. The wallet connection, if you are holding semiconductor stocks, this is the most critical dynamic to understand. The US government is putting a floor under domestic chip production. They are effectively saying, we will not let Intel fail. This creates a moral hazard, sure, but it also creates a massive government moat around US tech. But there is a dark side. This alliance means that commercial diplomacy is dead. The White House is now the sales team for Silicon Valley. Trump is twisting the arms of wealthy Middle Eastern petrostates, Saudi Arabia, the UAE, forcing them to dump Chinese tech and buy American. Look at the G42 deal. This Abu Dhabi AI powerhouse had to sever ties with China to get access to Nvidia's latest chips. They are now investing in the US-controlled TikTok entity. This is the new playbook. You want access to the American financial system? You want NVIDIA H200S? You buy American, or you starve. This brings us to the losers of this new game. And I'm looking at you, Europe. If you have significant exposure to European indices like the DAX or the FTSE, pay attention. The transatlantic relationship has shifted from a partnership to a landlord-tenant arrangement. Jacob Hellberg, the Undersecretary of State for Economic Affairs, a Silicon Valley guy now in the White House, said the quiet part out loud: Americans love Europe, but Europe needs to give America a lot of love too. He calls Europe's regulations a shakedown of American companies. For years, the EU has tried to be the world's regulatory superpower. They couldn't build a Google or a Facebook, so they decided to find them instead. The GDPR, the Digital Markets Act, these were Europe's weapons. Trump 2.0 has essentially told Europe, stop it, or else. Washington is actively lobbying to gut European antitrust laws. They are threatening trade wars if Europe tries to tax US tech giants. The economic consequence: we are witnessing the vassalization of Europe. The continent risks becoming irrelevant in the AI race, reduced to being a customer of US tech rather than a competitor. If this trend continues, capital flight from Europe to the US will accelerate. We are already seeing the euro weaken against the dollar. The smart money sees that the growth, the innovation, and the protection are all in the US. The Trump administration views Europe not as an equal, but as a market to be captured. And with the security guarantee of NATO always looming as a bargaining chip, Europe has very little leverage. However, it's not all victory laps for the US. There is a specter haunting Davos, and it's coming from the east. While the US is building a walled garden, China is flooding the world with open source, cheap AI. Last year, the buzz was all about DeepSeek, a Chinese startup that produced an AI model rivaling OpenAI's GPT-4, but for a fraction of the cost. This is the nightmare scenario for Silicon Valley. If China commoditizes intelligence, if they make high-level AI free or dirt cheap, it destroys the profit margins of US companies. How does Microsoft justify a $30 per month Copilot subscription if a Chinese model does it for free? This is why Trump is reacting with such force. The gunboat capitalism isn't just aggression, it's defense. The administration knows that if they play by free market rules, China might win on price. So, they are flipping the table. They are banning the competition, forcing allies to shun Chinese tech, and subsidizing US champions. The investment angle: this is an AI Cold War. We are going to see a bifurcation of the internet. The US sphere: high cost, high security, proprietary models. The Chinese sphere: low cost, open source, widely distributed in the global south. Investors need to watch the margins of US software companies. If Chinese open source models get too good, the pricing power of US SaaS companies could collapse. This is the biggest bear case for the Mag 7 stocks right now. Let's peel the onion back one more layer. We've talked about the politics, but what about the mechanics of your money? We are moving from an era of efficiency to an era of resilience. In the old Davos world, you built your factory wherever labor was cheapest. That kept inflation low. That's why you could buy a 65-inch 4K TV for $300. In the Trump 2.0 world, you build your factory where it is political safe. You build it in Ohio, or Arizona, or a friendly nation like Mexico. This is inflationary. You cannot reshore the entire global supply chain without raising costs. However, Trump bets that the wealth effect from a booming stock market and a dominant US dollar will offset the higher prices of goods. It's a gamble. He is trying to run a high-pressure economy. 1. Tariffs protect domestic industry. 2. Immigration restrictions tighten the labor market. 3. Deficit spending on industrial policy. Usually, this would lead to the Fed hiking rates to the moon. But remember, Trump believes he can pressure the Federal. If he succeeds in keeping rates artificially low while running this inflationary policy, we are looking at a potential 1970s-style stagflation risk, or a 1990s-style boom if the productivity gains from AI are real. It is a binary outcome. There is no middle ground. So, where do we go from here? Let's look at the next 3 years of this term. The best-case scenario: Trump's gunboat capitalism works. The US effectively bullies the world into subsidizing American growth. The Silicon-Washington alliance leads to an AI productivity boom that crushes inflation. The dollar remains king because there is literally no other safe alternative. The S&P 500 melts up to 8,000 or 10,000 as global capital flees Europe and China to park in American assets. In this scenario, the US becomes a hyperpower, and the rest of the world becomes a client state. The worst-case scenario: the MAGA Marxism backfires. Retaliatory tariffs from the EU and China crush US exporters. The cost of living spirals out of control as cheap goods vanish. The national debt, fueled by industrial subsidies, becomes unsustainable, and the bond vigilantes revolt, sending yields spiking. If that happens, the Trump put the belief that the president will always save the market fails. The reality on the ground: right now, the market is betting on the bull case. The Davos Man has capitulated. They are buying tickets to the Trump show. Organizers of the World Economic Forum even promised the White House they would downplay climate change, the very issue they screamed about for 10 years, just to get Trump to show up. That is the definition of power. When Greta Thunberg sat in that audience in 2020, she represented the moral pressure of the future. Today? She's not the headline. The headline is survival. Here is the bottom line. The era of believing that politics shouldn't interfere with business is dead. Politics is the business. If you are investing based on PE ratios and balance sheets alone, you are missing half the picture. You need to be investing based on geopolitical alignment. Avoid companies with heavy exposure to China that can't easily pivot. Avoid European firms that are in the crosshairs of US regulators or trade reps. Watch US defense contractors, US chip manufacturers, and energy companies. Watch the US dollar. As long as it rips higher, emerging markets will suffer, and US assets will reign supreme. The spirit of dialogue is the official theme of Davos this year. But that's a lie. The real theme is get on board, or get run over. Donald Trump is appending the global economy from a Swiss ski resort. The old order is gone. The spirit of dialogue has been replaced by the art of the deal. And in this deal, make sure you are on the side of the guy holding the leverage. Thanks for watching. If you want to survive the next crash or capitalize on the next boom, make sure you subscribe and turn on notifications. I'll see you in the next one.